Good morning, everyone. This is James from Dividend Stock Talk, where we talk about dividend stocks and investing for monthly and weekly cash flow. This year, we're doing pretty great. We've been averaging well over 1% per week. You guys who've been following me know that we do 4 different trading strategies. We got the dividend capturing, we have dividends on steroids, we have double dividends, and we have dividends with options. All based around the dividend stock and the EX date. Because I found in the past that by investing only in dividend stocks, you know what I forgot to do? Only investing in dividend stocks. They have a tendency to move when the dividend comes out. What I forgot to do is tell you that today is Tuesday, December 19th. Look at that. Christmas is next Monday. Oh my goodness. Hope you guys got all your shopping done. Me, I do all my shopping on the 24th. But anyway, let's get back to business. It is Tuesday, 7/23, December 19th. Sorry I didn't get to you guys last night, but I want to get it out first thing this morning. So you guys want to do some trades this morning? It's a great idea. I'm looking to break 100% this year. So I got 2 weeks left. That's it. Oh my goodness, the pressure is on. Okay. Anyway, let's just jump right onto it. Back to what I was saying. I forgot what I was saying. Oh, anyway, yeah, we're doing weekly and monthly returns. Now we look for 1% per month on our dividend capturing. You know, that's when we just buy the stock, capture the dividend, move on to the next stock. A lot of people say it doesn't work, but with the right software, you will find out of the 7,000 stock companies that do trade on a weekly basis, that quite a bit of them do exactly what it is we want to do. And that's why I created that software. So if you're not a member yet, think about it. You know, the software breaks it down very simply. You just enter the stock, tells you what's what, and the easiest way to use it. So I'm getting sidetracked. Let's jump in. It's Monday. We got 4 days. Let's see how much money we can make in 4 days. Remember, we're looking at 1% with our options, investing in stocks with weekly options. So that being said, today's the 19th, which is Tuesday morning, so 10 days from today would be January 2nd. Stock market opened back up January 2nd. So we're going to look at those companies for the week of the 2nd of January. Now, what we came up with is CMCSA. We all know that's Comcast. And GPS is Gap. You know, fall into the gap. You know, they make those gaps, whatever. And then January 4th, we have, what could this be? American Express? Yes, we love American Express. BMY, what is that? Oh, Bristol Myers Squibb, awesome company. CSCO, you'd think it's Costco, but it's not. It's Cisco. Now, there's 2 different Ciscos. Cisco, the one that does the food, and Cisco, the one that does computer software. So it's kind of confusing. This one, I believe, is Cisco Systems, which is the computer-related software company. JP Morgan, gotta love them. NTAP, that's NetApp. Not really quite sure what they do, but they have weekly options, and I love investing in them also. So let's quickly jump in. Comcast is a definite. So we're looking at 15.5 cents, 15.75 cents. CMCSA. Okay, this is where they are now. They started out the year at 35. Quickly jumped up to a trading range at 37, and then they got stuck in the 40 area, making the high of the year at 42 and the low of the year at 34. So right now, we're in an upswing with Comcast. They got the dividend coming out in 10 days. So let's see what they're going to do for the rest of the year. And that, we use the seasonality. Seasonality just tells you what can we expect it to do at that time. Now, this is where we are now. That is clear, concise, on an uptrend for the rest of the year. So that's what we're going to do. Let's jump onto Comcast. CMCSA. Okay, Comcast ended up at 39.54. Let's see what the 39 looks like. We want to always look at the vertical spreads, because that's where I find simplest and easiest. And I'm going to tell you that in a minute. Hold on, okay, 39.50. What are we looking at? 40 cents. That's a 25% return. Okay, so I can do that. 25% for 1 week. Now, although it's 25% for this one trade, it's not 25% of all my money, because you diversify and you put a bunch here, put a bunch there, put a bunch there. So our goal is only to make $1,000 for the week. Okay, that would give us our 1%. When you start out with $100,000, 1% per week is $1,000 per week. Now, isn't that nice? 1% per week. Most banks are paying 1% per year. Anyway, so we're going to look at the 38.5, the 39. What that means is, well, let's just quickly put the order in. Confirm the order. Here you go. My break even is $38.90. The most I can make is $500. How much am I putting up? I'm putting up $2,000. Could I do more? Yes, I could. However, if it goes the wrong way, I'm on the hook for buying 5,000 shares of Comcast. Now, I can cover 5,000 shares of Comcast, but if I did 100 contracts, I'd make $1,000, but I'd be on the hook for 10,000 shares of Comcast, which I know I can't afford. So I have to stay within my means. So you have a big chunk of money to play with. And you always have to think, what happens if it goes the wrong way? Granted, I'm making 25% off of this trade, but I can't make, I can't put myself at risk for the stock going the wrong way and then me having to have to buy it because I can't afford more than 5,000 shares. Okay, so this one is 50 contracts of this week's 38.5, 39. So what's going to happen is, let's send that off. As long as this stock stays above 39, we are going to make money. So basically, if the stock goes up, we make our 25%. If the stock goes down, it can go down all the way to 38.80 as our break-even point. If it stays the same, we make money. So if it goes up, we make money. Stays the same, we make money. And if it goes down just a little bit, we still make our 25%. That's what I'm doing. That's why I like it. And it said I couldn't do this trade because apparently I'm out of money. Why is that? I'll show you why. Because of Humana. Yeah. Okay, let me quickly see where I am with Humana. Okay, I got 2,000 shares at 250. 2,000 shares at 250. That's 20 contracts. So HUM. And she's at 246. She's got the dividend coming up this week. So she should be, and she's on a nice rise. Well, actually, yeah, she's on a rise. Now she's going sideways. What this is, I don't know. It could be a little fluke. I'm not quite sure. Let's see what the seasonality looks like for Humana. Yeah, Humana should be going sideways and a tiny bit on the upside. So let's get back to our standard chart. Let's create a closing trade. So let's buy it back at 250. Okay, considering I can't do anything because I am over budget, in a bad position. CAH is in the money. I could turn around. You know what? I'm going to sell this one also because I can't make any more money off of it. All right, I'm going to sell it for 49 cents. I bought it for 40. Sell it for 49. That's going to make me my $2,400 profit. That'll be good to go, so I can do something tomorrow. So I can't do anything, so I can at least tell you guys what you guys can do. Comcast, that was a good trade for Comcast. CMCSA. Okay, it is where she is now. 39.54. And this is a pretty nice uptrend for the whole year. You'll buy it in January, sell it in December. How can you go wrong? Alright, this represents this year, and this represents 10 years worth of history that we've done for the last 10 years. So the last few weeks of the month, of the year, this thing's going to continue to go up. How can you go wrong with that? Okay, so you have a bunch of things working for you. Seasonally, over the last 10 years, it always increased over the last few weeks of the year. It's got a dividend coming up. And it's priced right. You make it 25% by Friday on that one trade. So let's go look at another one. GPS. GPS, the seasonality of this is clearly on the downside. See that? So they have a tendency to go down towards the end of the year. So you know what that means? GPS is off my list. Let's see what the normal chart looks like. Yep, they started out the year at 23, stayed in the trading range for what, at 9 months. Quickly jumped up to 27, traded that one about 2 months. Now look at this. So she's like jumped. Now she's going sideways. But based on historical performance, this thing does not continue to go up. She has a tendency to go down this time of year. So what else we have? I'm going to take a look at American Express, and then tomorrow or tonight we can look at the other four. So if you guys want to throw something in before market opens, that'd be great. Okay, started out the year at 74, jumped up to the 79 area, traveled that way for about 4 or 5 months, jumped up to 85, traveled that way for 2 months. Whoops, let's get back to the oops, wrong way. Okay. Right there, and then it shoots up to this trading range here into the 90s. Now she's at 99, so it makes me a little leery because she's at the high of the year, and I don't like jumping in at the high of the year because where's the room for it to grow, you know? Well, that's indication right there. She has a tendency to go up this time of year, and let's see what AMX has to offer. AXP, sorry. Nice to be looking at the right company. All right. Last traded at 99.68. So let's take a look at the 99s. 37. That's going to give us what, 35% return. So let's quickly look at that. 50 contracts. $650 for a $1,900 investment. So you put in $1,900. And you're betting that this stock is going to stay where it is or go higher for the next 4 days. Now remember, American Express is a great company. They've been around for a while. They've been consistently increasing their dividends. And if all goes well, if she goes up, you're going to make it 35%. If it goes down, you can go all the way to 98, 87. It's down there. And still make it 35%. So if it goes up, make money. Stays the same, make money. And if it goes down just a little bit, you make money. Those are the only trades I like to do, because if you're if you add it all up, your dividend coming up, the seasonality looks good, the 1 year chart looks good, and it's very profitable. You make money going up, down, and sideways. Kind of like a no-brainer, and everybody knows who American Express is. And worst case scenario, you keep the company and they continue to pay you dividends every 90 days. Well, that all being said, this is James. I'm going to check out so that you guys can get on with your day, throw in some trades, and I will catch you later tonight when we look at the rest of the stocks. Hey, have a great day.